This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe, and today we're going to learn a little bit more about MACD. I continue to get questions about reverse divergence, and I think what I'll do today is start out with the standard divergence, and then we can compare that to what we're looking for with the reverse divergence. I think that might help. Then we'll also go through a bullish version and a bearish version. Hopefully this will kind of cement it in for you so you get a much better idea of what we're looking for. If you want to learn more about some of these techniques, I would suggest starting with the book. You can go to rabilstockresearch.com/book for more information. Also, if you like this content, please hit the like button and also subscribe. Okay, so I'm using an hourly chart of DEER, DE, and let's go ahead and just start out with the standard divergence. When I go back here, you can see back in November of, just a few months ago, we had a move down in price. Price makes a lower low here, and the MACD actually makes a higher low. All right, so we're seeing price move down, and we're seeing MACD confirm to the downside, making a new low with price. And then we get a rally up, and then we make a new low in price, but the MACD actually makes a higher bottom. All right, so that's standard divergence. This typically occurs counter trend. The trend is down, and we're looking for a reversal back up to the upside. It's almost like a reversion to the mean. Okay, so it's a little bit different than what we'll typically find in a reverse divergence. All right, reverse divergence, you're usually finding this in the direction of the new trend or in the direction of an existing trend. All right, now I'm going to show you the bullish version here, and this is actually kind of interesting. We make this move off the low, and if you notice, we break the downtrend line here, right? And we make a move to the upside, and then we make a pullback in price. We rally up to here, all right, and then we pull back. And if you notice, we're making a higher bottom. This is making a higher low, not a lower low. See how price was making a lower low back here? Well, now we're making a higher low. And I like it when it takes place at or around the 18 or at or around the 40. All right, we want one of those two things to take place. We want it to be a higher bottom at one of those two moving averages. Now, if you notice what's taking place, even though price is moving and making higher lows, MACD is actually continuing to drop down and make a lower low here. All right. So when it happens early in a new trend, if you notice what's taking place, we were kind of working our way down, and then this is sort of like the reversal pattern. And early in the reversal, we're getting a reverse divergence pattern. All right, and you can notice that because the MACD is testing the zero line here for the first time. When that happens, a lot of times we're looking for a much bigger move. We're not necessarily just looking for a little trading move. We're looking for something a little bit more significant. All right. Now, let me move over here and let's look at the negative version of this because I got a question about that as well. So if we look at what's taken place, we actually break the zero line to the downside. Now we're in a bearish trend, and we get this. Let's start with this one. We make a move up, we come back down, and we make a lower high. We're making a lower high in price. Notice how the MACD actually makes a slightly higher high. See that? This is actually going and making a slightly higher high. That is reverse divergence, and it happens right at the 40 MA right there. All right. Now, if we look at what takes place as we keep moving on, we can use this as the first point, and then we make a move down, and then we make a rally back up, and this is the second point. All right. Now, that's also a lower high. But if you notice what MACD does, MACD makes a higher high, and this time it's right at the zero line. Okay, so we've got another reverse divergence, and this will happen sometimes when we're in a series, when we get a consistent trend in place. Sometimes you will see the market or stock will continue to give these signals over and over and over again. All right, so that's a lower peak, and this is a higher peak. and it happens right at the zero line, those are good signals. Now, because this happened after, we'd already made a decent move, I would view it more like a trading play as opposed to the start of some big decline, like we saw here, which was a pretty substantial move. All right. Now, if you notice what actually took place after this, then we made a new low and we rallied up, pulled back, made a pivot high, another pivot low, and then we made another lower high. You see how this is another lower high right here? But look at what MACD did, significantly higher low, and it runs into the zero line again. All right, and here we are, we're seeing kind of the result of that reverse divergence again. So this is what we're on the lookout for with this signal. We just, all you have to do is understand the basics of what we're trying to do. A standard divergence is where we make a lower low in price and a higher low in MACD. And when we're looking at a reverse divergence, it's where price is making a higher low and MACD is making a lower low. All right. Now, if it's on the downside, it would be where price is making a lower high and MACD is making a higher high. In all of these cases, the best one of these reverse divergences will happen at the zero line. Those are going to be the best trading plays. And the way I would do it is if I have this showing up, so I know this is a reverse divergence right at the zero line, then I'm going to go down, if this is a 60-minute chart, I'm going to go down to a 10-minute chart, and I'm going to look for a sign of a reversal for a trading play to the downside. Yeah, it would be an intraday, just an intraday play if I'm doing it that way. But that's how I would use it as a signal that gives me a heads up to be prepared for a decline. So that's typically how I would go about using this this specific MACD setup, and I think it can be really useful. Just remember, if it happens early in the trend, there can be a lot more upside potential in a move, or downside potential for that matter. All right. Let me know if you have any questions. See you next time.